Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 17th of September, 2020. This is episode number 1839. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Just let me know if you don't hear me nice and clear. This morning, the overall market sentiment is towards risk aversion, towards safety. The leader today is are the bond treasury futures, the U.S. Bond 30-year bond futures, up a handle and 7 ticks, quite a bit. The yen, the bund, the 10-year note, and the euro are all higher. The dollar's lower by only about 4.5 cents. And the NASDAQ is taking a hit today. The NASDAQ's trading down at 10,960, down 295 points or 2.62%. Profit taking there. And continuing to drop. We just made a new low on the overnight session. The S&P's down 56.25%. Or 56.25 points. Wow, if it was percent, we'd be in talk about something else. So 57 points down 1.69%. The Russell's off 24.7 points, 1.59%, and the Dow's down 361 points, 1.29%. And so that's where we stand. The crude oil is above. The October crude is above $40. Yet again, it's off 14 cents from yesterday's settlement, or 0.35% down. Clearly, although it's interesting. Oh, hang on. The cat has something to say. What do you want to say, cat? No? Okay. You're all done? All right, good. Anyway, it's interesting. Gold is off as well. Gold is down at 1947.2, off $23.30, or 1.18%. So I find that pretty interesting, especially with the dollar being down. Now the cat's definitely a bear today. Definitely a bear. So that's where we stand. In terms of the economic calendar, there was quite a bit that was released today, but what's driving this, apparently, what's driving this in the selling from yesterday is of course the Fed conference, where Fed's Powell says he sees a long road to maximum employment. Long road to maximum employment. The way Federal Reserve Chair Jerome Powell sees it, the U.S. labor market has a long way to go to meet their central bank's maximum employment goal, and a lot of boxes to tick along the way. Market didn't take that too well. It fell off yesterday following those comments. And so we're coming into today with investors coming in expecting higher jobless claims this week, and taking to heart this statement about the employment situation. I mean, ultimately, not having maximum employment or full employment in our economy means less consumption, means less profits or less margins, means if stocks trade against earnings versus pumping and buying back their stock with free money. Essentially, if they were to operate as they should, that would be bearish for the economy, right? Employment's an important factor in the economy. This morning's jobless claims came in at 860,000, which is still really high. We traditionally are, it's been a long time now. It's been, 7 months. Traditionally, we're in the 100,000 or so, 150,000 initial claims, weekly claims. We're still at 860, much better than the 1.3 million weekly claims. So The number was expected at 830, came out at 860. Continuing claims 12.628 million versus 13.5 million expected. What's left for today? Really nothing substantial. We do get the inflation rate out of Japan at 7:30 for those of you who trade during that time period, and that's the wrap up for for the calendar. Let's take a look at what was expected yesterday. I'm gonna for the first time really I'm gonna do this. Really, I probably shouldn't do these scenarios on FOMC day. It really is pointless. At least on non-farm payrolls and unemployment, the number will have come out by the time I've done these, and I can chart out a bit of a projected or expected or visualized path. But really, there's no point on the FOMC. It was all over the place. Here's what the market did yesterday. Let's switch to a 4-tick Renko so we can look at the rotations. This is what the market did. Not that much activity, of course, until the afternoon as expected. Just back and forth. We had a nice opening swing. It's an open auction in range on top of the prior day's point of control. And what we did is for much of the session, we built a point of control that was on top of the prior days, completely balanced. The market was accepting these prices. We finally rotate down into 92. There was a zipper consolidation at 91.75. At 91.75 on the close the prior day, went to 92 and then went neutral on the day by pushing up above, but really remained inside of the overnight stat, and we are just swinging across the range with a pretty sharp point of control at that point on top of the prior day's point of control. So brace yourself for a break. The break, of course, came right here. This is the FOMC, and you can see the activity, the level of activity, because the Renkos don't print unless there's enough movement. You can see that not much happened before the 1 o'clock Chicago time release of the FOMC, and then the FOMC, the Fed conference, and then you could see that a lot of the chart occurred to the right of that. That's where the activity is. So we ended up pushing through the overnight high from the prior session at 18 and a quarter, tagging this, missing actually this naked point of control by a tick, and then sellers came in and what was an impulse. So look for a pullback. The pullback was either the mid of the impulse, but this was a beautiful setup right here. We had an impulse down. We had the mid of the impulse plus the prior day's high plus the zipper for backup. Very clear risk reward here for continuation through the low it had just put in at 3,400, and the break of 3,400 is likely to precipitate into more selling, and it did. I understand and I get that hindsight is 2020. Talking about this at this point is like telling you what's going to happen in a story after it's been watched. But my point is the rotations, the action here was quite orderly yesterday. What I did not expect is for it to run and take out the prior day's low. This ends the one-time framing up that we've had for the last several days. And then we finished really on a neutral extreme down. We were not able to get back up above this zipper that we left behind above us. We were not able to get back into the IB to finish neutral normal. So, as you guessed it, the expectation is the market is likely to continue lower. And with the break of the one-time framing up, we're likely to fill in some areas below. I'm going to try to make this as quick as possible. There's a lot here to cover, but what we have done is we've moved from this the area, the big area above, and also 3360 right here, and this big control area is now this big area, this high volume node is now in control. Let me switch sessions. Sorry, this takes a little bit. Two, 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 two. So let's look at this. We have moved from this high acceptance area up here, 3406. A lot of volume took place right here, there, there. We've moved away yesterday. We've moved away, and what we have is basically initiative from this balance up here. We have some initiative action, and we've moved down lower. And what that's likely to lead to is it's likely to lead us into this 3361 and keep us moving in the direction of 3361. So that puts that on top of us. What is going on here? That puts that on top of us. And now what we're doing is we have moved into an even more important acceptance area right here. This is where we're trading. We're trading at 33.18. We are initiative away from the latest auction, and we have pushed through this big area right here, this big area that we would expect the market to kind of stall at, and we are below it. So as much as this is running away and it's dropping quickly, I expect responsive play here. I expect the market to responsively come back to the 33.40 area today. So that's the main idea. The market generally does not, unless there's some really massive news, it generally does not break through high volume nodes. These are big defense area. These are acceptance areas. It doesn't just break through and walk through. I expect that it'll likely reject this low volume node here on the open at 33.16 and rotate back up. If it does not, this is really big. This is really a big move for against the buyers, and we start to tackle 3300 and we start to move towards acceleration down into this 3268 and so on and so forth. So you can see the next big defense area is down here. The next low volume node, see this low volume node is very prominent. Once we clear the 3316 and if we push below it today and hold, then we are likely to point our guns towards this 3290 area as the next key area to test. This is just the big picture. I'm going to throw a wrench in this a little bit today by showing you this chart. Don't get confused. Don't get intimidated by it. This is just a market profile chart. Okay, this is using time as opposed to in the form of letters. Each letter represents a 30-minute slot called the TPO, time price opportunity. Same chart, RTH only, but what's important is to pay attention to the profile to the right and to see the one asset that market profiling does, which I used to be very, very heavy into. One asset it has is it over long time frames, it tends to show things a little more clearly than a volume profile. And so these are the important areas that we are likely to encounter. We have been trading in this zone right here. You can see a high volume node. The market's right here at 3317. And the expectation in general is that it is likely to revert back or try to respond today and come back into the balance that's been up here. If it does not, like I said, if it does not, it starts to rotate down. We have some key areas below that it is likely to test. So swing traders, rejoice as you may get your short opportunity, a short swing opportunity for a good 50 points or so. So just keep an eye, just a different perspective. I'm always trying to look at the market from different angles. But overall, That's what's setting up. Let's move into what's expected for today so I can let you all go and I can move on with my business here. Sorry, hang on a second. I need to switch my chart back to 24-hour. Takes a second. Hey, in the meantime, go to edgeclear.com. Check out my brokerage if you want. It's a pretty shameless plug, but here we are. Okay, here's the chart. It's set up. So, what are we expecting for today? Market's out of balance. Very clear trend overnight. It has found some balance, but look at the point of the overnight point of control. The overnight point of control is right on top of the composite point of control, the micro composite point of control, and the high volume node in this area. Very orderly. I expect this to be a magnet. So the primary scenario is to open, attempt to push down, and an impulse up and move right back into the 3341 area and then consolidate in here before deciding what it wants to do next. Probably creep up for much of the session. This is what I'm looking at as scenario 1. Scenario 2, responsive, pushes right up into this 33-31 area, confronts some liquidity here, impulses down, starts moving through this low volume node at 33.1675, and then attempts to break and then comes back in, finishes basically where it starts, and what that'll give us is a gap down. We have a gap down today. It's a gap down on rest day, and then tomorrow will be very important to see if it fills that gap to the upside. My inclination is that we're likely to hear from Fed officials, from the president, from somebody, Kudlow, somebody. They're going to come in and talk about how everything's going to be a-okay and a stimulus is in the works or some such thing. They have to quell the selling. And that's what they're likely to do. They're likely to come in and talk the market up. So be careful of your short. I'd like to see us fall and fill in some of the gaps below. We have a few gaps left below us, but if not, then it's likely to grind up as it's done for the last 6 months. Good luck today, and I'll catch you tomorrow morning. Remember, tomorrow's quad witching. So just the morning is going to be noisy. It's likely to be noisy, and it's likely to be quiet. But we'll see. Just mind your risk. Wait for your opportunities. Be patient today. Take care.